Hello, everybody. Welcome to Market Moves. I'm Jason, the Wizard of Oz. Hey, Jay, how are you?
Hey, good, Wiz. I can't complain. How's your weekend?
It wasn't bad. I had it was my anniversary this weekend. Went and saw the Festival of Lights, the Bull Run Festival of Lights. It was very nice. My kids liked it. So
Oh, very cool. Congrats to you and Jill on
yeah,
the wedding anniversary. So
thank
hopefully it
you.
was a good one then.
Yeah. So how was your weekend? Anything good?
Yeah, I was in Los Angeles, a little bit of some work meetings, but more importantly, went to go see a football game. My beloved Huskers here. We lost, unfortunately, to USC. Uh, let's not talk too much about the results, but what a great city to watch a football game in the fall. You got the sun, it was like 70. I've never experienced better weather at a football game.
Yeah, football games are one of the. I don't like going to football games. It's cold. It's expensive. I like tailgating, but I could do that at home. I throw a barbecue at 30 degrees out. So,
That's right.
anyway. So, interesting week last week, huh, Jay?
Yeah, super interesting week. I mean, obviously post-election, obviously we know Trump will now be our 47th president, right? And it was quite interesting. I think the realities of what a Trump admin might look like, and as he was picking some of his, cabinet selections, I think you saw the market start to unwind some of those decisions. So before we go into like this week, last week our big target here, or what our plan was from the bearish side was, you see us pop 6,000, and if we come back down below it, like you got to think short, right? So that was one of our short triggers there. And obviously it took us until Wednesday, I think, last week to start making some of the move. And then Thursday is when we broke 59.50. That was, 59.75, 59.50. Those were kind of my two important levels last week. We finally took those out. And then when 59 went, oh boy, did that really go. I mean, I even said, I think we have unfinished business at 858.50. Now, do I think, the earth is blowing up here and the stock market's going to blow up? I mean, we'll see. We were up 13 points overnight, and now we're basically back to flat. So let's jump into this week, talk a little bit about what we are after. So
Just real quick, as a quick
yeah.
retrospective from last week, I take a lot of heat sometimes when we talk about the data that we have, and our data, as a trader myself, I used to use JEX and, the information that was out there for dealer positioning. And we found it to be wanting, which is why we started Volland. And I was saying that, this OPEX is really where all of the Trump positioning is, or last OPEX, that is 15 November. And I said, that's really the danger point. And it took until we hit 15 November. And now there's kind of going to be there's a volatility shift as well. Back then, for the election, we had elevated volatility that was sticky for weeks, and it all had to unwind because the market thesis that we wouldn't know the president on Tuesday night was wrong. So it all had to unwind. It did so bullishly. I think, honestly, I think some of the narratives of the Trump presidency and the moves afterward are accurate, with Tesla rallying and bonds tanking. I think that there were a lot of things that were because of Trump, but a lot of the equity moves in particular were dealer positioning. So, with the timing kind of showing that there is at least a local top last week, it shouldn't go without much doubt that Volland has good data. We have very good data, and the best out there for dealer positioning. So just to kind of, as a quick retrospective of last week. But anyway, so Jay, let's continue. Let's talk about your weekly plan. Actually, before you go into your weekly plan, I wanted to tell you something, Jay. And
Yeah.
that is the other day, someone DM'd me and told me how much of a game changer your analysis was, how much it helped their trading, and how your identification of these Vanna levels has been a game changer for them. So yeah, I mean, it's been just, if you haven't received that feedback, just let you know that I'm receiving that feedback in your stead.
No, that's awesome to hear. No, I mean, I encourage people to direct message me as well, message in the Discord. But I love hearing feedback like that, just to hear that from anyone. So thank you. Really appreciate it. It means the world. This is not easy. And I'll just be honest with you. I traded for a couple of years before Volland. Like, to me, like, and it's not that I'm paid here to sit here to do this. It truly has evolved my trading skill sets, my mindset, how to trade. So I can't tell you, Wiz, thank you for building this as well. So
Yeah.
enough of the thank yous. Let's jump in here. I mean, here's my initial lean on the week, Wiz, was that we don't have a lot of catalysts, and it might, we might suppress volatility. Maybe we get a little bit of a relief bounce from last week's selling. But when you start to look at this, I mean, the big thing that kind of stands out for me, obviously, the Bank of Japan's governor, he spoke last night. He speaks again Thursday. But the big catalyst is going to come down to, there's some retail sales in Europe, and then manufacturing and services PMI on Friday, both in Europe and America. But I know we're going to talk about it here, but Nvidia to me is going to be the mover this week here. There are a few other important earnings I will just call out really quickly. Walmart, from a consumer discretionary standpoint especially. We have Walmart, we have Lowe's, and Target also reporting. So personally myself, while I won't be trading those, I will be very attuned to how their results are and what retail customers are doing across those.
I have to ask, what is Powell? Is that Jerome Powell? Does he have his own stock now?
I didn't even see that, but now that you call that out, who knows? Maybe. We'll have to look into that one now. I didn't even see that one. All right, let's jump into this week here a little bit more. I know we've got a lot to cover. So the market makers expect about a 97-point move this week. They were completely off last week. We went below their expected move. So this week puts us about 59.67 and 57.73 to the downside. So quite a heck of a move that they're predicting in terms of the options market there. Aggregate Vanna, while increasing, is still not at the comfortable levels that I would like it to be. So this is showing positivity, but we're still not there. Let's just jump into the... Yeah, go ahead.
Just to talk a little bit about aggregate Vanna, a lot of that spike is because of the spike in realized volatility. So it's like a calculation thing. I mean, I could go into this a little bit later, but we did see a little bit of put positioning for December. I'm sure Jay will talk about it a little bit. But comfortable level, like to me, like the bullish bearish border of aggregate Vanna is roughly 15 billion in aggregate Vanna. So we kind of touched it last, I guess Thursday that is, and retreated back. There is some support for it, but I think a lot of it is more calculation based, and there is a lot of sold calls again. So Jay, you'll get into that a little bit, but some people were looking at that chart in our Discord and saying, "Oh, that's it, bullish now."
Yeah.
But you also have to remember it's a leading indicator as well. So I mean, I think we're going to see some volatility before that realizes, but that also calls into question for continued downside, constant continued downside through the end of the year. So just as a quick note, since my job today will be going through Nvidia, so I have to interject on my SPX opinions.
No, please do. I mean,
no,
I mean, you call it out here. Like, if you look at just the cumulative Vanna exposure here, and like this has become very, very important to trading, and I think people who follow my trade plan will agree. I mean, from a buying pressure, there's not much. And I think we saw majority of that buying pressure overnight here. We hit about 58.90, which is near that 5900 positive Vanna that exists out there. So unless we see volatility suppress, like I just don't see us how we're getting above 5900 at this point in time. Now, if volatility does not suppress and we do see more volatility, there's all this selling pressure here, and it takes us all the way down to 5,800 before we start finding some buyers again. So, in my
I think
opinion,
that, go ahead.
go ahead.
Sorry.
No, go ahead.
Yeah. So the way I'm kind of seeing it, that little divot there, which I believe is like 58.35 or so, right?
Yep.
That little spot right there, that's where I'd want to see the reaction, right? That's just from my personal trading. Yeah, that to me is a critical spot. And if we crash below there, yeah, I think the floor is the limit.
yeah. I 100. It's not a lot of support that goes down that way.
Right.
So, I mean, if you look at even on the weekly level, like similar picture. I mean, when I see a cumulative Vanna that looks like this, I just know welcome to maybe Chopville as well. Like a move will occur, but it's not going to be as clean as you expect it to be, right? So
Yeah.
there will be some fake outs and, some relief rallies or resell really fast. Just don't get caught in the middle of it, right? Wait for some of those extremes to hit. And if I kind of look at that, if we look at all of our Vanna strikes, I thought originally that these areas would be supportive in the market like they were last week. This is our 58.50 where we bounce. Now, this is all, predicted on no volatility, obviously. If we look at, the VIX futures here, there's definitely some volatility that has occurred. But you know what? Give it some time. It's Monday. Monday's always weird with volatility, as you know. But this is what I'm looking for. I mean, you lose this 58.40 here on the week, like all bets are off. You're chasing that 58. I think it was 35, like you said, which is right here. Positive Vanna there. So that's your flip. Your pivot is what I usually call those, Jason. But I'm in agreement with you here. Like we hit here overnight, and now we're shifting back this way. So today could just be a little bit choppy, but on the week, I mean, these are the three levels I'm looking to the downside. Those start giving and volatility increases, like game over. Your thoughts?
Yeah, I agree. I think we need to see, when you see negative Vanna strikes like this, or even strong positive ones like you see above at 5,900, you need to have extra volatility, kind of a push in order to get past them. Recently, last week, or last 2 weeks really, we have seen volatility completely, I guess you could say, underperformed. We undervixed, and volatility underperformed the moves that SPX had. So, and to an extraordinary amount, to the point where it was past event vol, right? And I think that has to kind of play out a little bit. But even on Friday, the volatility increase was not that much. I mean, compared to the actual SPX move, it was pretty much right on that spot vol correlation slope. So it wasn't, when we dropped, there was a liquidity vacuum, a little bit of illiquidity in the market on Friday. Plus, there wasn't that many puts, but when we dropped, it wasn't that much of a VIX move, over VIXing move. So I think that kind of says to, what Jay was talking about. I don't think the downside is going to, on aggregate. I'm not saying today we're going to see red, because we might see a little relief rally, but those three red strikes, I need to start seeing some over VIXing in through these red strikes in order to start seeing maybe a bottom.
You nailed it. If you look at it on, that was the weekly that I was showing previously there. But when you start to look at this from all expiration views, right? Like the increase in volatility, it's not much. I mean, you're looking at 800 million here at the 58.50 level, right? About 446 million over here. These are not that big of strikes. On the weekly, they might be. But again, I think as you kind of hear sometimes from Wiz and myself, higher 10-year Vannas or Charm, or not Charm, but Gamma, excuse me. Like, these are the things, we look at the cumulative all expirations, because I can't tell you today, is it going to be a 0DT kind of day, or are we going to have the macro bros come in and just whiplash us, going up and down? So to me, call out the key levels. And then what's important there is, I know, hey, to get through this level right here, 5850, I need to see volatility increase, right? And use your spot vol correlation chart that we have here. And Wiz has done multiple videos. We'll definitely share those out. Our past live shows, we actually went through those. So it's there. I'm in alignment with you. While we're here, just a few people were asking me, like, which widgets do I have on mine? I mean, I look at, obviously, the all expiration, 0DT charm, and then you see these 6 boxes here. It's basically 0DT, the week, and tomorrow's view that I'm looking at. And then last but not least, deltas are important to me. So I'll look at those puts and calls separately, and then I'll look at that again, 0DT, and then on a weekly level as well. Sorry, there was a few people already asking me about that, so I thought I would
asking Jay what widgets he has is like asking your wife what she has in her pocketbook. The answer is yes.
Yeah, that's a good one. I love it.
What widgets do you have on your dashboard? The answer is yes.
Yes, I have them all. All right, I want to get you to your Nvidia. So, I mean, key levels on the week for me, 5,900, 5,865. Those are kind of, you break one side of that, you rock and roll, start going on those sides, right? So bullish bias, bearish bias, like I'm not touching longs unless I see 5,900 clearly break through. And we see some volatility decrease. So hopefully we get to see that, but we'll see about that. Then downside, I mean, 5860, I'll wait for it to trigger. And then, the levels that go below that. So what we just reviewed. So that's my plan for this week, Wiz. Any final thoughts on SPX?
Yeah. So, I mean, if you're going to ask me what my most likely track is, I do believe that we will see a little bit of a bounce, like a relief bounce, but it should be under VIXed. And if we see an under VIXed relief bounce, that is, VIX goes down more than the spot vol correlation implies. I would think that we're going to see an under VIX bounce, might even break 5,900, but only like a little bit. And that's just going to usher in the next leg down. So that's my expectation. To me, that's the most likely. So over the next couple of days, we might even get to your 5,900. We are positive Vanna. Excuse me, albeit small, but we might get there.
Yeah.
But I think that's just going to be a rip to sell on a swing basis. So, and then we'll see whatever 0DTE does. So we don't talk a lot about 0DTE here on this show, but that's because most of the option traffic on 0DTE is during the day. So you can't really talk about something you don't know how it's going to play out until the day it begins. So,
100%.
So that's something you have to kind of join the Discord for. Yeah, so I mean, that's kind of my most likely, but the other thing too is that 58.35 on the downside. I want to see how the market reacts to that level when we have the 3, red, I guess they're sold called strikes that are in the money right now. That level right there is kind of where I want to see the reaction of the market. Is that supportive puts underneath? Are they going to actually support? Because it's not a lot, like you have to zoom in to see the divot.
Right there.
So, yeah, now it looks so much steeper. When you zoom in, it looks so much steeper. There you go.
Look at the difference there.
Yeah. Here, just zoom in. It's heavy support when you zoom in.
That's right.
So that's that's where I really want to see a reaction on the downside. And if we don't see anything past the little green peak right there, if the market still continues down, I would think anyway, puts are going to start being bought, because it's clear that there are not many puts bought below those levels, and we're going to need to see more of them if we're going to, hope to get a bounce into the end of the year. I'm not counting out a Santa rally yet, but other things have to happen in order for that to, in order for the Santa rally to happen. If options are not traded between now and the end of the year, 5,500 is almost like it's inevitable. So
it's trending.
but there will be trades. So that's kind of why I'm not saying, you know, absolutely yes, but because I do need to see when we start over VIXing, and I think it'll be after we drop past that peak there in puts. So that's speculative, though. I want to see how we react at 58.35. All right, so I guess it's time to talk about Nvidia, right? Does anybody want to hear about Nvidia? Yes, no, nobody wants to. Okay, then we'll just ditch it. We don't care. Right?
Just a few people.
Some people want to hear about it.
Yeah.
All right. All right. I guess I'll go through this. So, and we're updating. So, for Nvidia, from a Volland standpoint, we won't talk much fundamentals or anything. But as you know, earnings are mostly a vol event. So, if Nvidia comes in line and there's no big negative surprise, this big strike right here at 150 is the magnet. I mean, it is head and shoulders above every other strike here, and it is almost single-handedly causing this strong positive Vanna trend, right? Nvidia also does not have, though, as strong of a relationship to its spot vol correlation. So, event vol will have a big deal, but I wouldn't expect it to be completely measured. Nvidia tends to beat their earnings usually quite comfortably, and every single press conference, every single talk on their phone call, their teleconference or earnings call is usually very optimistic. There's very little hawkish talk in Nvidia conference calls, and Nvidia tends to rally, but those rallies have diminished over past earnings. This 150 seems to be the magnet. I mean, it's unquestioned kind of how high this is, and how much of a magnet this would be after earnings. So with the positive overall Vanna and this huge strike at 150, to me, it's almost the easy play to just do a butterfly at 150. Now, if it surprises to the downside, again, the floor is the limit. We have no support underneath for Nvidia. This was a sold call. So, if it fails, you can see a downside. So maybe if you want to hedge your butterfly, which this would be my most likely, would be a butterfly around 150. But then the risk I would hedge is buy a put, deep out of the money put. Put vertical, because skew tends to be very steep on earnings calls. So maybe like a put vertical here, down here in like the definitely south of 130, but maybe down here at like this 120 area. Get a put vertical, but then also expect to lose on it and profit on a butterfly around 150. Your thoughts, Jay?
Yeah, I'm just kind of looking at the charts here, comparing, where the options market's kind of positioning itself. But yeah, like 130 is important there. 125, as you mentioned, I see some consolidation that occurred there from a volume standpoint, and I think below that, then you got like 115. 115 goes, I mean, that thing can head back towards 190 at that point in time as well. So yeah, I think you kind of nailed the wings there. I would agree with that.
Yeah, I think that downside risks are stark, but chances are you're going to see small upside. I would go definitely short gamma. Do not go, don't buy a call here, because the implied volatility drop is going to cost you way too much. You want to go kind of short gamma, maybe like a 140, 150, 160 kind of butterfly. The other thing to note is that Nvidia earnings are Wednesday after the close, which means that the Thursday and Friday are live for your thesis. So on Thursday, you could get perfectly right in the middle, 150. Do not leave it on. You're going to have to take it off before because Friday Nvidia will be once again at the whims of the market, and it could take away from your strike. So, yeah, I mean, not a ton of extra analysis needed though, because you see right here, you see puts and calls, a lot of sold calls here above the strikes, and then this big sold call here at 130, reflected right here. Puts alone, a lot of long puts, but people were putting them on before the big drop. So so you can see some of these puts are in the money. That usually helps the bull case. Any in the money and in the money options tend to help the direction in order to make them out of the money. But yeah, so I mean, this is kind of like where my focus would be, is that 150 sold calls. People are clearly selling calls since the earnings are, make those calls pretty rich, and that seems to be the strategy of institutions. So, yeah, it's a fairly clear view to me. Do you have any other thoughts on this, Jay?
Yeah, I mean, honestly, for myself, like I will be trading this, but after earnings. It's a coin toss, right? Like
Yeah.
who knows what, they could come and crush their earnings, but then the CFO or the CEO says something that just completely demolishes any positive outlook, right? So
Yeah.
the data's here, though. Obviously, I think Wiz has guided you with a great strategy on this one if you did want to trade it. Obviously, full disclosure, I carry Nvidia shares in my long-term portfolios, like a lot of others probably do here. I'm not worried, right? I'm not worried for my long-term portfolio and what Nvidia will or won't do. It's not going to make or break it, right? But playing its earnings can make or break your portfolio, obviously. So earnings are very, very volatile right now. I don't know if you've seen premiums Wiz on this sucker, but it
Yes.
seems a lot more expensive than it normally is. So yeah, that's just my personal opinion. I like to trade afterwards.
Yeah, I mean, so with your trading style, I mean, you use equities and futures as your vehicle, right? And if you're using equities and futures, I completely agree with you, Jay. Step out from earnings and step in afterward. I personally am an options guy. I make Franken spreads doing all kinds of, I see longs here, I see shorts here, now I go short gamma, I go long gamma, and I just sit there and pay attention to my Greeks. Or my Greeks the way I want to see them? Yes. Okay, good. Then I got a good trade. And then sometimes when I'm going a little awry, I will hedge some of my Greeks. Almost in that way, you can almost say I trade a little bit like a market maker does. Except I don't neutralize all my risk. I just point out which risks I like, and then I try to keep it in that region. But yeah, so when trading options, though, when trading like I do, I love earnings, because earnings to me are an event where where one of the variables of options is going to go down, and that is volatility. That volatility is going to crash after earnings. And when you see volatility crash, and you have Volland, you can see what that kind of volatility crash is going to cause, what kind of Nvidia move. From a fundamental standpoint, Nvidia's earnings are always off the charts, it seems, right? We expect, 50 cents or something of profits, and we reach $5. That's Nvidia seems to do that quite often. So I think that it's going to be very difficult to exceed expectations too much on Nvidia. I do think that it'll be because expectations are always so high, no matter what the earnings estimates are. I do think that the downside, the risk to return on the downside, is larger than it is on the upside. When you set expectations high, it's so much easier to fail them, right? So, so that's why I kind of think like that kind of double spread, the short gamma around 150. And when you said, did I look at the options? I believe 13 points is the expected move for the week right now in Nvidia, and 150 is 12 points away. So that's a short gamma move. I would say short gamma all the way up to 150 or like 15 points away. So if we drop today and Nvidia goes down to 135, 130, that's when you would start looking at long gamma versus short gamma. But yeah, so I mean, that's kind of where I'm at. I would expect Nvidia not to move much from this area, maybe like up or down $5 at most. And so if we stay within that $5 range between, 134 or so, and then 145, if we stay within that range, that butterfly and bearish vertical is that's the right play.
I would agree with
yeah,
you.
But usually when I put on an earnings spread, which I probably will for this one, I do it right before the earnings. I'll do it Wednesday at 3:30 or something like that, right? That's when I'll put it on. So that's what I recommend when playing earnings, if you're going to play them. Also, very strong risk controls. Do not put in, don't even put in like 1% of your portfolio. Do like 50 bips, because the payout will be 2-3%, but very small, 50 bips at most, right? I know there's people out there with small accounts. I understand if you have too small of an account where 50 bips doesn't get you one butterfly, you shouldn't be trading, really. You should be building capital. So that's kind of the, you don't want to be constrained by capital when you're doing these moves. So that's what I got, Jay. Let's see. Should we take questions or?
Yeah, I think we've got one.
Do we have any questions?
When
Tesla? Oh, Tom.
Oh, love it.
Does this get tricky with all the option traffic coming from miscellaneous tweets and news related? So I think that the second part of your question is the big wild card. Tesla has now become a little bit more fundamental, I guess you could say, in nature, like political. I don't know what the word is here, Jay. Like it is.
I know what you mean.
Yeah, it's unmoored a little bit from the options traffic. I think it's rallying now because last night didn't Trump say he's going to relax regulations on self-driving, which scares the heck out of me. I'm going to want a lot larger rear view mirror.
I think that's part of the challenge here with Tesla is that it's going to follow a lot of what Trump is going to do. You kind of saw with the EV tax credits, right? They wiped that out, or that's Trump's plan is to wipe that out. Now, originally, everyone thought that was super negative, right? Now, if you're in Tesla's shoes, though, that's positive news for you because you're like, hey, I make enough EVs at good cost, right? I don't need the tax credit. I have my electric stations that are running a lot of tax credits for me on top of that, right? So if you look at it from a Tesla standpoint, that starts to erode in the competition. So the Chevys and the Fords and all the other companies who are relying on these tax credits, right? It's going to now be harder for them to get consumers to potentially buy. So that's like the dynamics here right now is like, let's say the tax credits don't go anywhere. More than likely they will, based on them controlling, the Senate and Congress and all that fun stuff, right? Like more than likely that's going to happen. Now that's going to be what we'll see negative to Tesla initially is not going to be, and it's going to be positive. And you see that today, right? We're up almost 20 points from yesterday's close overnight on Tesla. If it holds here by the time we open in about 20 minutes. But I think that's a hard thing here. Like if you look at just the Vannas and things of that nature, like you've got numbers like 330 here on Friday. I saw this even. I almost wanted to buy calls, but my God, the premiums are just too crazy to like hold anything over the weekend, in my opinion. But I mean, yeah, you come in here like we're essentially going to go target this 360 here, probably maybe today or tomorrow, right? So I think Tesla's a little bit of a tough one. I think in general, if we're above 300, this thing's going to go see 420. And I'll call it 420.69, as everyone else has been saying out there and calling. It's coming. It's just a matter of when. and can you ride it out the storm by the time it gets there, right? So this doesn't move like the rest of the market as well these days. If you notice, like,
Yeah.
SPX is down, Tesla's up. You're like, what the heck? So that's my thought.
Tesla seems to have a mind of its own. It always has. Kind of, it's it seems like whatever Tesla does, the rest of the market just kind of compensates and says, all right, we have a Tesla desire here, an SPX desire there. Whatever happens, happens. And now at this point with these Vanna, you see, like when you scroll back or zoom out, Jay, if this were any other stock, I'd say this is like heavy resistance all the way up. But just like the fundamental changes that, and Tesla is so speculative, and, fundamental traffic, fundamental flows are going in and out so much quicker than, option flows, that this would not necessarily be a major resistance. One thing I will say though, on that note, is Tesla makes a very rare stock that you can option trade just by like buying calls and puts by knowing the fundamental story. I mean, if you knew that Trump was going to relax something like, self-driving or anything like that, then it's going to go up no matter what the dealer positioning is. It will go up. So that makes Tesla kind of attractive despite the high option volume. It makes Tesla attractive for options traders. And I see that all the time when people, say there's a lot of people that want to trade Tesla with options. And it kind of has that casino sort of effect when it is unmoored from its option traffic. The price movement doesn't really pay much attention to that. So actually, I'm going to look real quick as to the spot vol correlation of Tesla, because that would explain things in my.
Yeah, I can quickly add it in here too. Oops.
Yeah, what is?
Let me add a widget.
Yeah, the spot vol correlation is 0.01. No,
geez.
It literally is unmoored from its options positioning. There is no correlation, and that's because of all the fundamental kind of stuff. So,
there you go.
Yeah, so that's pretty much my my Tesla talk. I very rarely will trade it. It really has to have a lot of event vol and something like that. Elon Musk has to throw a rock at the Cybertruck window again. That's the only that's the only way I usually trade any kind of Tesla earnings or anything fundamental, because it is unmoored from its option positioning. So
well, you're
I can't imagine being a market maker for Tesla.
I would not want to be selling options for Tesla either. So that just scares me tremendously there. But yeah, I mean, this is for anyone who does trade Tesla. I mean, bravo to you and kudos to you for doing so. And thank you for sharing entertainment for our eyes while you are trading. But yeah, I mean, I was just looking at a few other things here. I mean, if you look at look at the 400 Vanna here. Like, like this thing, it's coming. It's just a matter of when now, right? So, I don't know. Buy leaps, not financial advice, but buy leaps. 420 is where this thing is going. Is what I look at it. Stay above 300. You're rocking and rolling.
Yeah, but even that analysis, I wouldn't take it with a grain of salt, because again, this is completely unmoored. And the spreads are wide. Market makers have no idea where this is going. I don't even think Elon Musk or Donald Trump know where this is going. So Tesla is truly the casino. So
truly is. All right.
Yeah. Any other questions or TLT's aggregate Vanna? So when we're talking about something like bonds or U.S. Treasuries, TLT is a small portion of that. But if you do believe in the law of no arbitrage, then you would assume that whatever is positioned in TLT would be positioned throughout at least the 30-year bond area. So that being said, TLT has a lot of its aggregate Vanna trend has been increasing all the way back from September. This is because a lot of those in the money calls are now coming. A lot of those calls are now coming out of the money, and now there's so much put support because of how much TLT has gone down. I would be bullish on this. Again, assuming that throughout the curve, you would want to on the rates, on the futures markets, it would be equivalent to what we see on TLT. I think I would be bullish on bonds based on this. And TLT it doesn't really have a lot of correlation to its options, so it's probably not a great assumption. But even fundamentally, if what Trump is saying in all of his policies, I see them more as economic contractory rather than expansion. They might be expanding the deficit, but economically contracting. So I don't know. That's just kind of my spot on this, but TLT tends to be a lot less aggregate Vanna than what it's at now. I think right now it's at like all-time highs in aggregate Vanna. So just something to think about. But
I'm not going to chime in anymore. You said it well. Move on from that. No need to
further
add.
opinion.
No further opinion there. You did great.
All right. Well, I've been on for 40 minutes. Do we have any more questions? I guess we're good.
Yeah, I think we're good. I'm just looking at them. Well, thank you.
Hey, look at that.
Lillian, I appreciate it. That's so nice of you. Thank you. Well, you all rock. Volland rocks. You are all so great today. You've made my week. So thank you. Thank you. See, you're helping people and I'm helping people. Like, that's all we want. We just want people to be helped and enjoying and making some money here. That's it.
Yeah. All right. So, Jay, pleasure seeing you again this week. And it's a thing. I hope anything, you got any last words or?
No, I mean, be nimble this week. We see the market here bounced right off of 5860 SPX, and it's now making its way back to 5885. So it might be this just bouncy, call it the kangaroo market sometimes, is what I call the consolidation market. So don't be shocked. It's early in the week. Volatility will come around Nvidia. Expect moves most likely around there, pre or after it. So that's all I have for you.
All right. So may Volland help you in your trading ventures.